Hi everybody, in this video I'll walk you through the net working capital formula, as well as an example that will help you understand exactly how to use it. I'm Priyanka Prakash, small business expert and senior staff writer at Fundera. The net working capital formula tells you if your business has enough liquid assets to cover debts and liabilities. This calculation is important for business owners, but also for investors, lenders, and suppliers who want to see that your company is effectively managing its cash and other assets. Fortunately, the net working capital formula is actually pretty easy to use. Let's get started by looking at the formula. Net working capital is equal to your current business assets minus your current business liabilities. Current business assets include things like cash, checks, accounts receivables, inventory, and any other assets that can be converted to cash within 1 year. Current business liabilities include things like accounts payable, short-term debts, this year's portion of long-term debts, rent, payroll, and other expenses due this year, and any other debts that are due within the year. Let's see the formula in action with an example. You can get all the numbers you need for the net working capital formula from your business's balance sheet. That's why net working capital is sometimes called a balance sheet calculation. Here's a balance sheet for a fictional business. For simplicity, I've just filled out the balance sheet information for the current year. The balance sheet shows current assets and current liabilities along with other asset and liability categories. For purposes of calculating your net working capital, you only need to care about current assets and current liabilities. In this example for a fictional business, ABC Bakery has $90,000 in current assets and $82,000 in current liabilities. Subtracting current liabilities from current assets gives us $8,000. The good news in this example is that the fictional business ABC Bakery is liquid. They have enough cash and other liquid assets on hand to cover all their debts. The bad news is that ABC Bakery is liquid just barely. They have only $8,000 more in current assets compared to current liabilities. This means that small changes could have a big impact on ABC Bakery's overall liquidity. For example, if rent increases, or if the business has trouble collecting on accounts payable, that can push its net working capital into the negative. In very general terms, a positive net working capital number is better than a negative number. Investors and lenders generally are happy to see a positive number for your net working capital. But the number can also be a little misleading. For example, a business might have a lot of current assets, but they might all be tied up in inventory. If you need to liquidate a bunch of inventory to pay off debts, that's not necessarily a good sign. In addition, if you have too much net working capital, that might indicate that you're not investing enough money in the growth-generating parts of your business. You need to break some eggs to make an omelet sometimes, so hoarding working capital isn't necessarily a good thing for your company. At the end of the day, it's the trend in your net working capital that matters the most. As your business grows and needs to make more costly investments to keep scaling, your net working capital should keep pace. That brings us to our next topic, how to improve your net working capital. The key to improving your net working capital is to increase the amount of cash and other current assets that you have, and decrease the amount of current liabilities that you have. To increase your current assets, build revenue and cut costs. This might mean adjusting the price of your products and services and being more efficient at collecting on accounts receivables. You can also liquidate unused inventory and unused assets such as old appliances to improve your cash position. Finally, be smart about borrowing money. You should only apply for business loans when they have a positive return on investment. For more information on business loans, head over to our video which discusses 8 different types of business loans. After watching this video, you should now have a better understanding of the net working capital formula and how to use it. Let us know if you have any questions in the comments below and we'll be happy to help. For more information on small business finance and other business topics, visit Fundera.com. You can also go to youtube.com/FunderaLoans and subscribe to our channel for more videos. Thanks for watching, everyone!